Yeah, if you already trade fair value gaps on gold, silver will feel familiar. The same fair value gap logic applies, but silver delivers price with more volatility and cleaner reactions. Alright, so in this video, I'm breaking down how to trade XAGUSD using the exact same fair value gap framework you use on gold, so you can spot high probability entries with confidence. Alright, so basically, it's the same exact way you trade gold. Same consistent thing. First and foremost, if you don't know what a fair value gap is, I recommend you check out my other videos, where I go more in depth. I also have a video I'm gonna link down below where I basically go way more in depth on fair value gaps and how to find them. And this video is literally just showing you guys how I do it on silver. It's really simple. Alright, so first and foremost, let me just notice how it's just been going up. But I'm gonna show you guys how to catch it going on a downtrend and catch it going on an uptrend. So first and foremost, let me show you guys on what to do first. So let me actually isolate an area. Like right here, this was a bearish trend. You see, where else? Okay, let's use over here as well. So the reason why I put in a rectangle around everything is just to show you guys, to isolate the areas and just show you guys focused areas on what I'm gonna do within those areas. So first and foremost, I'm gonna start out with the bearish trend. Alright, so how do we know? Let's imagine that price is at this area right now. We're not worried about anything past it. Alright, so we're just worried about what's in this box right now, right? So how do we know, right, that this is a downtrend, right? You have to identify what trend it is first. It's a downtrend. And I know some of you guys are saying I'm on the 4-hour. Yeah, I'm on the 4-hour. You can do it on any time frame, but right now I'm just using the 4-hour just for the sake of the video. Alright, so how do we know that this is, how do we identify the trend, right? So we identify the trend really simple, right? So what you do is, alright, so this was the initial low, right? This was the initial high low. This was the initial high, right? Let me show you high or low, right? High. Okay, so this high needs to take out this higher low to form a lower high. Okay, so did this one, when this high was formed, did this right here take out this higher low? No, it looks like it's the same area, right? So we would ignore it and wait for this higher low to get broken. So as you can see right here, this higher low did get broken. So let me go ahead and so once it broke it, it formed a lower low right here, right? It formed a lower low and went up and formed a lower high. Then this lower high went back down, took out this lower low to form a low right here, right? That's how we know it's been going down, right? That's how we can identify if it's a downtrend, if it's a bearish trend, and we're looking for entries. All right, so as long as it keeps making lower highs and lower lows, it's considered a downtrend. Okay, so how do we get entries, right? First, once you identify the trend it's in, you need to wait for this time, 8 a.m. Eastern to 11 a.m. Eastern, right? Eastern Standard Time, right? So wherever you are at, make sure you change the time to Eastern Standard Time, or you convert it to fit your time zone, okay? So once this is formed, right, and this lower low gets formed within this downtrend, you're gonna look for fair value gaps, right? Fair value gaps, you're gonna identify every fair value gap you see. So this right here is technically a fair value gap, but it's a tiny fair value gap. So you could probably ignore it, or you could use it. It's up to you. This is a fair value gap here. This is a fair value gap here. First candle, second candle, third candle. The third candle and the first candle's wicks don't touch. So you're waiting for price to get up there and then drop. But you really wouldn't use this one, because if you're on the 4 hour, this never broke this low, this high low. So you would probably ignore it, because for all we know, it could continue back up. You're just looking for fair value gaps after this high low gets taken. So this, now you could use this fair value gap, you could, but you know what, nah, let's not even use that, because as you can see, the wicks touch, so you can't use that. Alright, so you would probably ignore this trade and just look for another fair value gap. Alright, once this lower high got formed, we're looking for another fair value gap and seeing if there's another fair value gap here. You could use this fair value gap here. See how this one and this one, there's like a tiny little gap in it. Look, see the tiny little gap? So it's any gap, like any small little gap you can use. If you're using a lower time frame, you're able to even see the gaps faster and more efficiently. But right now, for the sake of the video, I'm only using the 4 hour. So I would use that tiny fair value gap. I would draw it out and I would wait to see what happens. And the only time I'm gonna enter it is if the price goes back up into that fair value gap, and it does it at around 8 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time, right? So if I zoom in, I see that price goes all the way up into the fair value gap, and then I see the rejection around 10 a.m. right? So once I see the rejection, I would enter the sell. Once it rejects that fair value gap and closes, I would look for the sell. I would enter, and then I would put the stop loss above the first fair value gap candle that you see, which is this one right here. Excuse me, this one right here. 1, 2, 3. There's a gap between the first and the third. So I would take it, push it up a little bit above the first candle, which is this one right here. That's where the stop loss would be, just to be safe, because you got to give it some room. Sometimes it could go past the fair value up like you see here, and then just go down. So the best thing to do is to have it above the first candle, which is this one right here, right? The first candle. So once that happens, you would hold for a 101, 1 or 2. See how much you could take, 1 or 3. So this right here, this trade right here went down by what, 1 or 3. So that's like 262 points right there on gold. So you would have caught this nice little sell on gold. That's how you catch bearish trends. So we can do the same thing for bullish trend. All right, so this right here is a bullish trend. How we'll be able to enter it. So first we got to identify the trend. What does this look like to you? All right, so somebody who's been trading for a long time can automatically identify this as a bullish trend, right? Right. So how do we know it's a bullish trend? Same thing you did with the bearish trend. You're just flipping it. So this was the first low, right? Then this low broke this high right here to form this higher high. Right, then it formed the higher low right here, right, because this higher low never took out this this previous higher low, so it just stayed above it, and you just keep doing that, right? Notice how it ranges. The ranges, look, see this range, it never took out this high, so it's still ranging. You wouldn't do anything to this until this one finally broke it, right? It broke it. Notice how this is above this higher high, so you will form a circle around that one. Then you wait for it to come back down right here. Why so basically you're ignoring this one. Why? Because this right here, it kept ranging within this. It never broke it up to this. So once it broke it, that's when you're basically using this one now to form the new high. And then you wait again. I still wouldn't use this because again, this right here never broke this, so it's just ranging. This is considered ranging, consolidating. So you wait for it to form a high. Form the high here. You could use this if you want, but let's just use this since that's more straight line. You need like a strong dip down, you know, before you could actually consider it a higher low. Like this is fine if it kept going, but like the best thing you could do is probably just to use this one right here since it actually did a strong pull down. Okay. Then you go ahead and form this one. This will be a high. So let me just higher low, high, higher low, higher low, higher low. Okay, so that's how you know that it's making a bullish trend. Okay. Alright. So once that's done, right, and you identify the trend, now you're gonna wait for what? Yep, you guessed it, the time. So you're gonna wait for 8 a.m. Eastern Standard Time, which is the morning. You're gonna wait for 11 a.m. Eastern Standard Time. So you're literally only waiting for this. Once you identify the trend, what trend it's in, you're gonna wait for 8 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time, right? So any time between 8 a.m. and 11 a.m., you're gonna look for entries, and you're gonna look for fair value gap entries, right? So initially, what do we see? All right, once this high low is formed here, we see it push up, right, and then come back down. So now we are basically gonna identify all the fair value gaps we see. So what is this? 1, 2, 3, 3 candles. The gap between the first and the third candle right here. You stretch it out. That's a fair value gap. What else? Look, another one. 1, 2, 3. Take it. No, excuse me. We stretch it out. Like that. See, 1, 2, 3. The gap between the third and the first candle, and we just stretch out the rectangle. What are the fair value gaps do we see? We see a fair value gap here and here. Alright. If you wanted to, you could identify this fair value gap as well. 1, 2, 3. If you wanted to. And then you just stretch it out. We got a fair value gap here. 1, 2, 3. 3 candles. Just stretch it out like that. Do we see a fair value gap here? Yes, That's 1, 2, 3. Excuse me, 1, 2, 3. And we just drag out the rectangle, right? So as long as you see 3 candles, 1, 2, 3. See, 1, 2, 3. Got between the first and the third. You can draw the rectangle. Now, how do we know which fair value gap to use? That's where the time come in, right? So once we identify that this is an uptrend, we're gonna wait every single day for price to pull back and form a high low, right? And then we're gonna enter that fair value gap that formed, right? So the first fair value gap that formed was this 1, 2, 3, right? Right here. So we're waiting for price, which is 10 o'clock in the morning, or 8 or 9, 10, 11 a.m. So we're waiting for price to come back into the fair value gap. This is 1800, 2200, 2 a.m. So we wouldn't even enter this. We're just waiting. Even though prices went back into the fair value gap, we're not entering this because it's not doing the 8 a.m. Eastern Standard Time and 11 a.m. Eastern Standard Time. So we're just waiting. Look, notice how price left us and went back up. That's fine. We missed it out on it. You don't have to keep chasing price. Just let it rock. Notice how if you just let it rock and you wait, price went back down into that fair value gap you formed, right? And you're waiting again. Notice how this happened. This is 2 a.m., 6 a.m., 10 a.m. Look, price is here at 10 a.m. around here. This 10 a.m. right here. What you do is you take out your tool, you enter, right? Now where you just stop loss be, your stop loss again, remember, it's below the first candle that initially started the fair value gap, which is this one right here. This candle right here. 1, 2, 3. This candle right here. So your stop loss goes below that candle, just to be safe, because you got to give it room, right? And then once you enter it, notice how you could have held for 1 or 2 if you just wanted to be in the price for that day. 101, 1 or 2, 1 or 3. If you really held it for real, you could have went up. You know, you could have went up. So that's one entry. Okay, let me exit it out. That's one entry. You could have made a 101 right there if you wanted to. You could have 1 or 2, 1 or 3. You could have just kept holding because price just kept going, right? So the next entry, right? Once you that enter, that's like you would have entered on a Thursday basically, and you would have made a good amount for that week, and you could have held if you wanted to too. So next week, Sunday, Monday, we identify another fair value gap that was formed here on Monday, 2 a.m. in the morning. We make the rectangle and draw it out. Then what are we doing? We're waiting for price to come back into this. Yeah, this is like, if you look at this candle, yeah, it's 10 a.m., but guess what? This 10 a.m. candle never went back into the fair value gap, so we're not entering. We're just waiting. Now it's Tuesday. Monday passed. You had no entries. Tuesday happened. Look, it always does it every single day. What is this? The candle went back into price around what? This red candle went back into the fair value gap at 10 a.m. in the morning on Tuesday. So what do? Yep, you guessed it. You enter, right? You enter. Then guess where your stop loss would be? Yep, below the first candle that started the fair value gap, which is this one here. 1, 2, 3. Fair value gap. Stop loss goes below like this, and you could have went for 101, 1 or 2, 1 or 3. It's up to you, or you could have just held because price kept going, right? But for the sake of the video, let's just put it down here. Notice how I'm entering every time around either 8 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time. So 10 a.m., which was right here, is when price went back into the fair value gap right here. And that's when I entered and I held. And I would have been in the trade for a minute. It's on Wednesday, I would have been in the trade. Notice how price kept giving people entries. It kept going back into that fair value gap to give people entries. So you could have double stacked. You could have entered more than once and just hold towards this high. Okay. Cool. So Thursday come, you form the fair value gap here. I'm glad this happened so I can show you guys. Thursday came, It formed another fair value gap on Thursday, September 11, 2025. But notice how price never went down here. So you wouldn't have gotten an entry. Price never went back down here, just left, right? That's fine. Look, another fair value got formed around here. 1, 2, 3, right? You're waiting. Notice how price came back down here. But guess what time it came back down? At 1800. That's not the same time as 8 a.m. Eastern Standard Time, 11 a.m. Eastern Standard Time. So guess what? You probably missed out on this trade too, because that's not the time. Now the reason why you do that is because you don't want to enter every single thing you see, because you could always get taken out. You know, so that's the best thing to do, is just wait for that time, because you're gonna get a nice entry. Look, this was a nice entry at 10 a.m. This was a nice entry at 10 a.m. and it never hit your stop loss. See, so that's the best thing to do, is to just wait. Right, another fair value gap here. Price never touched it. Right, never came down here, never touched it. So you're basically ignoring this trade. But guess what? It doesn't bother you, because you're still holding these trades. You know, that's the best thing to do, is to not get greedy. Just hold. Right here, price came down here. This fair value gap is here. Price came back down here around 2200. That's not 8 a.m. Eastern Standard Time. As you can see, let me move it. As you can see, price came back down here. The first price came down here into this fair value gap around 2200. So you wouldn't take the trade. You're waiting again. Price came down here around 10 a.m. So you could have taken this trade around 10 a.m. right? But guess what? You would have got stopped out. Put it below the first initial start of the fair value gap, which is this one, 1, 2, 3. So even if you put it down below there, you would have got stopped out. And that's just part of being that's just part of trading. Like, you're gonna lose, you're not gonna win every single trade. But if you still kept holding these, yeah, you would have lost this one. But guess what? You would have lost. You wouldn't have lost that much if you actually did risk management. You know, like, this would have been a good loss. You would have won 2 and lost 1. But notice how, guess what? So this high was formed here, right? Right. Notice how, if you look down here, guess what? There's a fair value gap here, right? And guess what? This high never took out this higher low, so it's not a downtrend. It just stayed within here and hit this fair value gap right here. As soon as it hit this fair value gap, you can see that it started playing around, right? So what you could have done was you could have waited for your entry again, right? Which was around which is around 10 a.m. Alright, but you can see that price already left, so you wouldn't have even took this trade. You would have just left it alone. You just have to wait again. Alright, so you would have missed out on this trade because it's not around the time, and that's perfectly fine. We're not gonna catch everything, you know, but that right there would have made you a good amount. So you only would have lost 1 trade and won 2. You know, so well over 60%. This would have been a good way to trade silver, you know, and you just keep doing the same thing every single week. Like, even now, if I go all the way up to where we're at right now, right, you can see that price wants to keep going up. Okay, you know, if you have made this fair value gap here, right, and then you put your stop loss below this right here, and then waited for, let me see, you wouldn't have entered this 10 a.m. because look, it's all the way up here. So that would have been, that wouldn't have been a good trade. You would just wait. Look, it came back down into this fair value gap around what, 10 a.m. in the morning. See, like, you're gonna miss opportunities, but at the same time, it's gonna give you opportunities again. You know, it's not going anywhere. So look, boom. So you already know price is gonna keep going up. So look, I just literally predicted it for you guys. So for today at Monday 19th January 2026, price is gonna keep going up. Like, it just hit this fair value gap, is going up. So, you know, I wouldn't, if I was sitting on the 4 hour, I wouldn't enter this, because at the same time there's no fair value gaps here for me to use. So I'd wait for price to go back up and then make another dip like what it did here, and went up, made a dip for me to enter for another thing. But this right here would have been a nice prediction. Look, 10 a.m. in the morning right here. Look, 10 a.m., which is part of our time. 8 a.m. Eastern to 11 a.m. Eastern. This would have been a nice trade. Stop loss would have been below that. Because if you really do it, your stop loss will really, it's so rare for your stop loss to get hit. Like, look, this would be where your stop loss is, below here. You know, like, your stop loss is not getting hit. Then, it would have flew up. As soon as it hit that again, it would have flew up, and you would have got a nice trade right there. You know? So that's how you trade silver. Pretty easy, using fair value gaps. You know, and this is only the 4 hour. Like, there's other ways to do it, like going on a lower time frame to catch a better entry, to where you can't miss out. You can even find a way to counter trend. So this is gonna be in a different video, but I'll even show how to, like, catch this sell here, right, and then catch this buy up. You know, like, literally ping pong in the market. Like, it's crazy. But for now, just for the basics, I think this is the best thing to do, is to just follow this video. If you guys are interested and wanted to find out how I use fair value gaps to trade with gold and other assets like cryptos, futures, just check out the other videos that I have on my channel. Thank you.